silver's going to 100 or 750 or $1,000 an ounce. Yeah. We expect silver prices to rise along with gold over the next 12 to 24 months. And it turned around because the gold price started rising again more sharply. It broke out of a $2,300, $2,400 range, and it moved into a $2,300, $2,500 range. And there were any number of shorter-term investors, more opportunistic investors, who are saying
silver prices are expected to rise significantly, with predictions ranging from $100 to $1,000 per ounce over the next 12 to 24 months. This anticipated increase aligns with a similar trend in gold prices, which have recently broken out of the $2,400 range and moved into the $2,500 range. This upward movement in gold is attracting interest from both short-term and opportunistic investors. Jeffrey Christian is a leading precious metals analyst and managing director at CPM Group. A commodities research and consulting firm, explains the correlation between changes in real interest rates and gold prices is weak, at just 16%. Contrary to common belief, higher interest rates don't always mean lower gold prices and vice versa. Since 1968, interest rates and gold prices have moved together about 25% of the time. What's more important is the reason behind the changes in interest rates. For example, if rates fall due to recession fears, gold might rise as investors seek safe havens. However, if rates fall because the Fed is easing to avoid a recession, the impact on gold and silver prices is less clear-cut. Over the past 3.5 years, gold prices have risen mainly due to long-term investment demand rather than speculative buying. During this period, there was a decline in short-term investment demand through ETFs, while demand for physical gold, such as coins and bars, increased. This shift suggests that long-term investors are buying gold due to concerns about the economic and political environment, while short-term speculators have been exiting the market until April. Western investors have been committed to gold for the long term through ETFs, but short-term investors, who are more reactive, can quickly enter and exit the market. Jeffrey Christian, in an interview with Jeremy Zaffron, tells, if gold prices spike to $2,600 and the economy or political situation improves, these short-term investors could quickly pull out, potentially leading to a 10% drop in physical gold demand. While long-term investors are less likely to sell, they might hedge their positions to protect against potential price declines. Poland and Turkey have different economic reasons for buying gold. Turkey, along with Kazakhstan and Uzbekistan, has seen increased wealth due to their role in sanctions-busting trade with Russia. This has driven strong demand for gold, as well as for dollars and euros in Turkey, where the local currency, the lira, is weak. Wealth generated from this trade is often converted into these more stable assets. Recent news shows that Russia's war against Ukraine has led many people in Poland to invest in gold. As we present clips from the video, please take a little time to like this video, subscribe to the channel, and turn on the notifications bell to be instantly notified every time we upload a video. Thanks for the support, and enjoy the video.
Interest rates and gold. The correlation between changes in real interest rates and changes in real gold prices is actually very low, like 16%. There are a lot of people who say, oh, higher interest rates, lower gold, lower interest rates, higher gold. That doesn't hold up to scrutiny in 84% of the months since 1968. So you've got to say it's not that interest rates are rising or falling. Why are they rising or falling? If interest rates are falling because it looks like we're headed toward a recession, that could be good for gold because there'll be people getting out of equities and corporate bonds, and they'll be parking some of their money in gold and silver. If the interest rates are falling because the Fed feels that it can cut rates to keep us out of that kind of recession, then they have a less dynamic opposite effect on gold and silver prices. And you can find, a quarter of the time, gold and interest rates are either rising together or falling together. So the correlation is not necessarily as dynamic as a lot of people simplistically think. There is a little bit of speculative things, but one of the surprising things to me is the lack of speculative demand. We've seen gold prices rising really for the last 3 3/4 years now, based on longer term investment demand. So, during the last 3.5 years, you have seen until April of this year, you saw a weakening of the shorter term investment demand for gold through ETFs and an increase in the demand for gold, for physical gold, coins and bars. So that's a longer term investor that's buying that physical stuff. And what we've seen over the last 3.5 years is long-term investors buying more gold because they're more concerned about the economic and political environment. And the shorter-term opportunistic guys who say, I want to buy gold because I think the price is going to rise, or I want to go short gold because I think the price is going to fall. They've been getting out of the market until April, right? Well, Western investors have been in there for the long term. With the ETFs and things like Sprott, you're seeing shorter-term investors. And that's where the pushback can come that you were asking about earlier is, those people can disappear as quickly as they appear. So if you see gold prices spike up to 2,600 and things get better economically and things get better politically, those guys can disappear. You could see a 10% reduction in the physical demand for gold on a short-term basis as those short-term investors disappear. The longer-term investors are not going to sell, probably. Some of them might. Some of them would be more likely to buy puts against and hedge their long-term physical positions against downward move. But those short-term investors who might represent 10% of the buying over the last 4 months, they couldn't leave as quickly as they appeared. Well, Poland and Turkey have fundamentally different economic reasons for buying gold. Turkey, along with Kazakhstan and Uzbekistan, have been the entrepôts for contraband, sanctions busting shipments into Russia. So there's been this tremendous need for currencies, and there's been a tremendous growth in wealth within Turkey, as well as those two stands, as people who are willing to skirt the sanctions make a lot of profits by buying stuff and transshipping it into Russia. Thus, you have seen a lot of wealth in Turkey. Turkish lira is not that great of a currency, so a lot of that tends to go into gold and then dollars and euros. And you've seen strong demand for all three of them in Turkey. Poland's a different story.
Silver prices are expected to reach record levels in the next year or two, potentially surpassing the previous high of $50 from April 2011. This increase will likely be driven by a return to investment demand, which has been low recently, causing silver to lag behind gold. When investors start buying again, silver prices could jump from $30 to $40 quickly. While fabrication demand, like for jewelry and electronics, is strong, it's price sensitive and doesn't drive major price increases. Investment demand is the key factor in silver's big price movements. The market has a balanced view of silver's role in solar panels, with some overestimating its usage and others being more realistic. The solar panel industry faces overcapacity, with factories running at around 50% utilization, possibly dropping to 40% as more come online. Last year, an oversupply of solar panels led to excess inventory, reducing immediate silver demand. While solar panel recycling is already happening, which lowers the need for new silver, silver use in solar panels is expected to grow gradually and become significant over the next decade. Let's dive into the interview.
Intraday prices for silver, the previous record was just shy of $50 in April of 2011. And we wouldn't be surprised to see record and quarterly and annual average prices for silver. So we see the price rising over the next year or two. We see that price increase predicated primarily on a return to investors buying. Some investors are continuing to buy silver, but there's been a lot of investors selling. So that if you look at net investor demand for silver, ignore what the promotional groups say about massive amounts of investment demand and massive deficits. If you actually measure the silver market accurately and honestly, the silver investors net silver investment demand is very low. Was very low last year, and it continues to be very low this year. And that's why silver has lagged gold prices, and whereas you've seen gold move to new highs over the last month or so, silver's come back off from the highs that you saw in May and June. So we think that the price of silver will rise when those investors who are selling, stop selling and start buying again. And investment demand can go from 20 million ounces to 80 million ounces very quickly. And that could take the silver price from $30 to $40 very quickly on a daily or a weekly basis. Fabrication demand is important, but it's grossly overstated by promoters. And you have to understand, fabrication demand for silver is price elastic. Silver investors buy silver when the price is rising, they come pouring into the market. When the price of silver rises, fabricators look to reduce their silver consumption. So you don't see gold and silver prices pushed higher by fabrication demand, jewelry or solar panels or electronics or other things. You see the big price moves in silver due to investment demand surges.
Interesting.
And so we see strong fabrication demand in several sectors, but it's not going to push the price higher. It's going to be investment demand handle on silver use in solar panels. There are people who have excessive ideas about how much silver will be used, and it's not recoverable and refinable. There are other people who say, probably those estimates are way too high. They are. We know that the solar panel industry is very much concerned about the state of the market. There has been an overbuild in solar panel manufacturing capacity. So that capacity utilization is probably around 50% right now. And with new factories coming on stream, it may fall to about 40% over the next few years, capacity utilization in the solar panel manufacturing business. And we've seen, for example, last year there was a overbuild of solar panels. So there were, quite a few more solar panels built in 2023 than were installed. So you had this inventory of solar panels, which then reduces the need for more silver to build until you draw down those inventories. So I think that the market overall has a pretty sober understanding of the role of silver in solar panels and the likelihood that it is going to continue to grow. It will probably become one of the top uses of silver over the next 10 years, but it's not going to be immediate. They understand that all of these political prognostications about solar panel building are politicians that usually don't live up to their promises. So, you kind of ignore that stuff and you look at what the solar panel industry is saying and what they're saying they can do. And then you throw in the fact that, in fact, not only can solar panels be recycled and the silver recovered, they are now. That's not a hypothetical that these solar panels can be recycled. There are solar panel recycling businesses around the world already. So that's going to be there. That reduces the need for new silver as you start recycling those things. So I think the market overall has a very sober, balanced understanding of silver use in solar panels, but there are extremes on either side.
While both gold and silver are poised for potential price increases, the driving forces differ. Gold's rise is influenced by long-term investment demand and economic uncertainties, while silver's potential surge hinges on a resurgence in investment demand. Despite some overestimations, silver's role in solar panels will likely grow over the next decade, though market realities like overcapacity and recycling will moderate its impact on prices. What factors are expected to drive the rise in silver prices over the next 12 to 24 months, and how does this compare to recent gold price trends? Share your thoughts on Jeffrey's suggestions in the comments below. Don't forget to like, subscribe, and turn on notifications for more updates. See you next time.